Although past decade news reports may indicate that the use of credit card processing in business could stimulate the economy, recently things have changed. Human factors now necessitate a vastly different recommendation according to merchantcashinadvance.com, 2011's largest merchant cash advance firm. In contrast to the traditions of former historical business loans, many business loan administrators now actually recommend that a business secure a second credit card for working capital and cash reserve purposes. Initially, such advice is meant to be used in frugal and wise fashion. For example, the original purpose is not to totally rely on a single economic source for fast capital or take the chance of overextending it, with nearly irreparable damage. The concept of two credit sources for a small business loan could mean that the entrepreneur can more easily balance spending between them in order to maintain a far smoother working capital flow. While this type of advice might work successfully for some consumers, a business loan carries with it an even stronger responsibility. That is, in times of trouble, an ordinary consumer maintains the option to cut back on unnecessary spending habits. More formalized businesses, on the other hand, must keep a standard amount of assets in liquid form, so that the daily needs of business can continue without disruption. Simply put, countless business expenses fall into fixed category classifications. Further, when international economies hit unexpected low points, domestic entrepreneurial performance can be hardest hit. Thus, the initial advice above can easily cause corporate executives and small business owners alike to operate with a slightly false sense of security, and find themselves indebted to multiple creditors, often unnecessarily. The circumstances of merchant cash advance and business loan spending delve even deeper. For instance, the conscious effort to battle against higher interest rates on one credit card processing company often backfire, as even business loan lenders are business owners who experience part of these effects. National economic pitfalls usually affect all concerned. Yet, surely, corporations and businesses at the lower end of the business loan spectrum experience most of the exerted pressure. Put simply, lenders are likely to have protections much higher than those of the borrower in a financial crunch, who will fare better. The recommended solution for merchant cash advance catastrophe avoidance revolves around more careful observance by current business owners of occurrences which affect overall GDP, gross domestic product, developments. Technological change still has not replaced the science that explains national and international economic indicators, reports Merchant Cash in Advance. Ironically, present business owners do not actually need to attend a formalized institution or possess sufficient business credit training in order to command a firm. Yet, the lack of formalized financial operating procedural knowledge can prove itself to be future detriment. Such types of preparatory mercantile training also reveal the basic foundation of large-scale economic operations. That is, the financial behavior of individual consumers, family units, corporate executives, and country-wide leaders combined with extremely unique sensitivity. Basically all behaviors related to business loans extension and merchant cash advance procurement must have a business owner's awareness and expertise in place to wisely prepare for leaner times that are bound to occur within standard business management.